Here in Lagos, Nigeria, the second trading day of March, and we see the Trump tariffs already permeating global markets. We'll drill down on asset classes impacted later on the show, but let's get to the top stories that get you started for your trades today. Starting with oil now, we'll see oil prices continue to decline today after reports emerged that OPEC Plus intends to go ahead with a planned production increase for April. Meanwhile, markets remain cautious about the potential impact of U.S. tariffs on Canada, Mexico, and China, along with Beijing's retaliatory tariffs on the U.S. And we see the impact right there. Red is the color, $71.08 a barrel. Wondering if Brent will hold on to the $70 level this week. But for WTI, U.S. grade there, that's lost its $70 level, $68.01, 0.53% down. So we're seeing the impact there on the oil market. We'll see if we might get sub 70 for Brent this week, but it's already looking quite challenging there for oil prices this week. Meanwhile, the Nigerian National Petroleum Company Limited has reduced the pump price of petrol to 860 naira per litre, effective that was yesterday. This marks a significant drop from the previous 920 naira per litre, offering relief to Nigerians struggling with high cost of living. The reduction comes amid stiff competition among fuel marketers and fluctuations in global crude oil prices, like we see the drop there. Also, the move follows Dangote Refinery's decision last week to lower its ex-depot price from 890 naira to 825 naira per litre, marking its second price cut. That was in February. And the Petroleum Products Retail Outlet Owners Association of Nigeria, Petron, has praised the NNPCL Retail Limited for reducing the pump price of petrol from 920 to 860 naira per litre, saying it will ease financial pressure on Nigerians. The association's president, Dr. Billy Gillis-Harry, says the move will lower transportation and food costs for Nigerians. Petron also commends Dangote Refinery for a 65 naira per litre refund to retailers affected by the price cut. Dangote Refinery recently dropped its ex-depot price there from 890 to 825. So we're seeing this price war, I guess that's working for consumers at this point. With these reductions, Petron is urging Nigerians to remain optimistic, stating that government reforms are yielding positive results. Let's look at business activity now. We see Nigeria's activities, that's growing at the fastest pace since 2024, driven by economic reforms, and that's according to the latest Stanbic IBTC Bank PMI report released yesterday. The Stanbic PMI report shows headline index rose to 53.7 points in February, up from 52.0 in January, signaling a solid business improvement. The report highlights increased output in agriculture, manufacturing, services, and wholesale retail, with new orders growing at their fastest pace in over a year. Stanbic says businesses reported higher demand and lower cost pressures driving growth. Supporting this trend, Nigeria's inflation rate dropped to 24.48% in January, according to the National Bureau of Statistics. With the rebased numbers, analysts say this signals a more stable business environment and growing investor confidence. And to some company news now. United Capital PLC posted strong results for the 2024 financial year, with profit before tax rising 74% to 30.10 billion naira, and profit after tax soaring 111% to 24.10 billion naira. At the same time, total assets saw a major boost, jumping 83% to 1.70 trillion naira, while shareholders' funds grew 47% to 133.50 billion naira. Also, the company is rewarding shareholders with a 33% increase in dividend payouts to 14.4 billion naira, following its 2-for-1 bonus share issuance and an interim dividend of 90 kobo per share. All right, we'll take a moment now, then we'll unpack what's playing out in the commodities market. That's in a moment. Do stay with us. We have so much to unpack in the commodities market today, and we have Mr. Bismarck Urani, MD, CEO of Financial Derivatives Company. Great to have you on the show. Good morning, sir.
Good morning. Thanks for having me.
Yeah, so before we get into the local commodities, we see markets are Roil today as the U.S. tariffs on Mexico, Canada, China, that comes into effect today. How are you seeing what's playing out so far?
First and foremost, is tariff today and no tariff tomorrow. I think it's part of a bargaining chip, but the markets don't like it. And you can see the markets across the world, in Europe, in Asia, have all fallen precipitously. So we expect this to play into the fact that the negotiation between the US and China and Mexico and Canada is going to be short-lived. In other words, the US has to concede something on the trade front, but also has to concede something on the immigration front as well. So there are three things at play here. One, the Ukraine-Russia crisis and the NATO thing. Two is the tariff, and three is the immigration. I think in all, there'll be a composite solution that will resolve all of these matters. But the markets, of course, are reacting, and Trump watches the markets very closely. And we've seen the markets come down sharply. We've also seen Bitcoin, I think, also take a hit. So generally speaking, I think before the end of today or tomorrow, there'll be some further negotiations, and then things will settle. But talking about that, you've seen what has happened to the price of oil, and the Brent is now all the way down to $70 and could trade lower. At this point, Nigeria's revenues are in deep trouble. And so, yes, we see things are improving, but we should take note that the price of oil and the production of oil is critical to our economy at any point in time. This is very important.
Right. And talking about oil, Mr. Ronnie, we know the relationship between oil and PMS prices. You know, once oil prices go up, you expect PMS or fuel prices to actually go up when it comes down. And we're seeing it down this morning. But we see the NNPCL, they've reduced their pump price. And some are wondering, you know, this is great. You know, the price war, I guess, is great for consumers at this point. But we're hearing the sounds of subsidy. Is that coming into play at all here?
No, I think that in a price war, nobody wins. The consumer wins in short run, then eventually the markets go back to where it is. Amongst the suppliers, they fight themselves, and somebody dies and the other one survives. But basically, at the end of the day, I think between now and June, until the price leadership is firmly established, and that is what has happened. Dangote is the price leader. He's the dominant player. He has over 90% of the supply. And he's determined to ensure, one, that the price and quality is guaranteed. And he's also determined to ensure that he has uniform pricing across the country, using all the resources he has. And don't forget, this is Africa's richest man and 63rd richest man in the world. So he has the resources and he has the determination, and he's definitely going to win this battle.
So that means it's possible to have lower prices, that's for PMS, without subsidy. Yes. Without subsidy.
Well, there's an element of subsidy in it, but let's not go into the subsidy issue. The question is that it's producing, his cost of production, based on any form of imagination globally, is about the best you can get. Therefore, he continues to be able to pass on the cost efficiencies to the market, and also having to support his position as a dominant player with other resources from other businesses he has. So I wouldn't want to be an opponent of a price leader in a market like this. So generally, between now and June, we'll see prices begin to decline. But after June, and things stabilize, depending on what happens in the global markets, oil and global currency markets, we might begin to see some stabilization.
Right, and for the oil market, we're seeing projected increase in supply to the markets for April. So that's for two sides now. We're seeing bad for government revenue, but I guess good for PMS prices.
Yes, in April, I think what we are seeing, or what we hope to see, is that in April, we see the prices remain at this level at about 860. But I don't see it falling below 860, because at that point begins to eat into the cost. You do not produce where your marginal cost is higher than your marginal revenue. So I think that at this point in time, We should thank God. 860 is about almost, based on the exchange rate today, is about almost 90, or about 80 cents across the country, across West Africa. They're selling about $1.30, $1.20. So let's not lose sight of the fact that we are in this market, we are in this economy, but we have neighbors who are also selling the same product at about $1.25, $1.30. After a while, the equilibrium point is where you are producing and selling in this market without the incentive for people to take it across the border. I think that's very critical for this at this point in time for Nigeria, if we want the reforms to work and for the economy to expand accordingly.
Right, and we're in a new month now, and I guess it's that time again where we take stock of what's to come for inflation for February. And we have discussions around the rebase and the old methodology. What are we seeing for inflation in February?
Yes, we carried out our survey and we're seeing this. Remember that in December, we had inflation as high as almost 34.5%. For the January figure, using the old methodology, mind you, we saw January come down to 33.35. And now we are projecting that February is going to go down to 32. So if you take it all the way from about 35 to 32, it means that inflation has declined by about 3%. And you can see that reflected in some of the nominal prices. We stayed away from the new methodology because we want to compare oranges with oranges and not oranges and apples. So if you look at prices that we see now, current prices, we've seen that beans has come down by 5% to 95,000 naira a bag. We've seen onions come down by 10% to about 90,000 naira a bag. But we've seen tomatoes go up, obviously because of the fasting. Tomatoes has gone up by 33% to 40,000 naira. Pepper has also gone up by 50% from 60,000 naira a bag to 120,000 naira a bag. Strangely, we have seen the price of rice come down by 5% in the last 1 month, in the last 2 weeks actually, to 90,000. So don't forget, in December or November, we were buying a bag of rice for as high as 120,000 naira, 125,000 naira. It's now down to 90,000. And let me tell you this, it's likely to go down to 80,000 naira within the next 2 weeks. That would be great news. But the point is that even if the prices are coming down and the people have no money to buy it, then there's further pressure to bring the price down because there's income and consumer resistance to the current prices.
Right, I guess that's where we see demand destruction, playing in there. But so going by the old methodology and new methodology, it seems inflation is tending downward.
Yes, it's moderating. And when inflation moderates, then there's pressure on the central bank at their meeting in May to actually bring down interest rates. And if interest rates begin to come down marginally, then it begins to send a signal, anchor inflation expectations that we are going to be seeing interest rates decline. And if that happens, we might begin to see some changes in the value of the currency. But as of today, the currency, something happened yesterday. In other words, the dollar strengthened, right? And when the dollar strengthened, dollar weakened yesterday, but it has now strengthened today. We think that the naira begins to trade along, with the dollar. So it's at 1507 right now. We think at the end of today, it probably depreciates a little bit, about 1510, but it's going to stay in that range. Compared to this time last year, at this time last year, the naira dollar rate was 1,910. Today, we are 400 naira cheaper. In other words, the naira is stronger by 400 naira compared to where it was at this time last year. But don't forget, this time last year, it also went all the way. It appreciated all the way to about 1310, right, before going back up. So we have to be careful when we're talking about the currency values, but it is driven by a number of things, especially now that the price of oil is dropping. So the amount of dollars we earn from crude oil sales may not be as much as we used to earn at this time last year.
And for the Purchasing Managers Index, we have some good news there, the one reported by Stanbic, and we're seeing expansion there in the economy.
I think that is excellent news in the sense that the PMI, the Purchasing Managers Index, is the leading indicator. When you see it expanding, it means that growth is going to expand the following quarter. And where are we seeing this? We are seeing this in inventories. We are seeing this in orders. We are seeing this in employment of resources. And therefore, if it's at 53, it's very well entrenched in the expansion territory. It means that even though we got 3.8% growth in the last and the Q4, it means that in Q1 we are likely to see further expansion, and that would be great news. Don't forget the 3.8% growth we saw reported in Q4 was based on the old base year, the old methodology. So now I think the NBS is very cognizant of the fact that people want to see stability and want to see data credibility and data integrity. So with the GDP numbers, there's a lot of data integrity. And if that expands again, then that would be great news in terms of seeing economic activity pick up. And do not forget that it is in the first quarter of this year that we saw the tariff increase on telecoms. We've seen a drop in the price of petrol significantly. And we've seen the stability in the price of diesel. We've seen the exchange rate appreciate by about 9%. We are told that the Nigerian naira is probably the best performing currency in Africa in the last 2 months. Whether this will hold becomes another issue. So let's not, again, I always say, let's not get carried away. But when you have the good news, hold on to it and run with it.
All right, we'll be running with good news at this point. Thank you so much, Mr. Bezwek Rouhani, MD CEO, Financial Derivatives Company. Thank you.
Thank you for having me.
All right, now a couple of earnings rolling in at this point. We'll be drilling down on some of the cement giants like Dangote, Bois Cement, Lafarge, and we'll also be looking at some of the brewers there like Champion Breweries. To help us unpack these latest earnings, we have Mr. Mukhtar Mohammed, is the CEO of Finance with Mukhtar. Join me right here in the studio. It's great to have you.
Thank you, Laddie. Always a pleasure to be here.
Happy New Month.
Yeah, Happy New Month.
Yes, and coming from a month that was supposed to be the theme color of red, which was February. The market closed in the green.
Yeah, well, that's love. That means Valentine love the market.
Yeah, it doesn't have to give you red.
It doesn't have to give you red is love.
Right.
And when we're in the market, we love what we are doing and we love to make money.
Exactly.
So
which makes it
February
positive.
was a month of love for the market.
So positive.
Very positive.
Outcome. So we have earnings now. Let's look at some of them, starting with Dangote Cement. And we're seeing revenue growth, about 62.16% year-on-year increase in revenue, 3.58 trillion. We're also seeing some strong performance across their key markets, like in Nigeria and Pan-Africa. So looking at that, it's looking quite good, but we see cost of sales there, that's up again. And it seems we should be expecting, or now we just expect cost of sales will be high for most of these companies.
Definitely because of structural reforms in terms of the competition also added to that, and Dangote is expanding to other shores of Africa. So definitely cost of sale is going up. Exciting result from Dangote, but as an investor, my own take is if I'm investing in a stock, I'm either investing for capital appreciation or for dividend payout. So, and then dividend payout by what are the dividend yield and what is the earning per share. Earning per share came to 29 naira. 29 naira, which is then dividend payout at 30 naira. That shows that they actually had to go to their reserve to get that 1 naira extra. That means earning per share is negative for the year end compared to what it attained last year. Dividend yield is about 6.22%. At will release at the price of 480 naira. So what that tells you is that for investors, that's not exciting news. And you look at the dividend yield via treasury, fixed income, inflation, that's not fantastic. But when you look at the entry, at what price did you enter, then that's when you begin to look at whether you've really made profit from Dangote. That's for me, is where I stand as an investor. What comes to me, why is that stock exciting? But for an economic term, as an economist, definitely that shows that there is good news for the market, good news for the economy. Despite the cost of sale going high, you share that the cost of purchase of cement also has gone high. And that means that a lot of infrastructural development, which this government has prided themselves with, is working very well and is working in favor of that sector. Now you go back to BUA. You look at the dividend price, I think the dividend payment of about, is it 1 naira 70 kobo? If I'm not mistaken. I think it's 1 naira, is it? No, 2 naira 2 kobo.
2 naira 2 kobo.
2 naira 2 kobo for BUA cement. You look at the dividend yield there, it's poor. A dividend yield of, I think, about 2.something%, which also, when you look at the price at 90 naira, commiserate at when this result was real, commiserate to other stocks, there you think, look, that's not an exciting place to be, because again, the result looks fantastic, but what comes to me as an investor, as an investor in that equity, is not fantastic. So, will I still be there at this moment? And you also must know that BUA has not been generous when it comes to payment of dividend. It has always had to retain a lot of retained earnings, which is fantastic going forward. But how much of that retained earning does it tip in to pay off investors that have been patient or have been long-suffering in BUA cement? Lafarge there comes in there, okay, the last one also.
Yeah, revenue about 71.83%, yeah. Cost of sales 76% up for Lafarge. Wow. And pre-tax profit 93.27%. And we're seeing the same trend.
The same trend all about. Dividend pay at 1 naira 70 kobo. Dividend yield about, it had the lowest dividend yield in that sector. So, and the Lafarge are coming in with new investors coming into that space. So you have to also watch that space. Are these investors really going to be in the market?
Yeah.
Or will they delist?
The Chinese are coming.
The Chinese are coming. Will they delist from the market? Will they still be there? And if they are delisting, at what price will they be delisting? Currently it's selling about 76 naira. So at what price will they be delisting? And what will be... They have not said they will delist, but we're just... When you look at the trend, so you have, as an investor, you have to look at all this trend to know if you are really interested in that sector. But for me, I think in terms of what we've seen in the cement sector, we have seen sale volume go high, but come with a lot of costs, which you are saying the cost of sale also has relatively gone.
And we see the price of the product is also high.
Yes. Now, if you look at the cost of sale, Bismarck said something about relativity in terms of gas pay, in terms of diesel payment, stability in the diesel payment side of it. But also you have to also look at most of these companies are not on the national grid. Most of them are not on the national grid. They provide independence power for themselves. That also comes with a cost. And then if you look at most of them, expansion is actually one of the greatest costs of most of this cost of sale going up, because most of them are not widely spread. If you look at the Nigerian concept, it seems like the one that have the wider market in terms of Prince Dangote cement. All others seem to be more or less like a regional type of sale. You see Lafarge in the southwest area, you get a lot of Lafarge. BUA also far north. Seems not to be so much present in the southeast and all that. Only Dangote seems to have that presence, and that presence is actually moving in this moving Dangote product in Benue State, and that's the cost of sales, the movement of those products are what are adding up to most of what you are seeing now. So a lot of factors are not working well for
a high cost of sale is not necessarily a bad thing.
No, it's not necessarily a bad thing, especially when it turns up to be positive in terms of profit. So it's not a bad thing, but again, you know what a low cost of sale would have done.
Well, that's quite good
for the market and in terms of profitability. So they are putting in the numbers in high cost, but again, you can imagine high cost of sale coming in there, then profit after tax poor. That could have been negative.
Right. So you definitely have to look at those relationships before judging. Their prospects now. So looking at these stocks now and looking at the industry. So far, what is it telling us, for 2025, for this industry?
I think positivity. There's a lot of positivity in that industry. Remember, again, they still have the FX challenge.
Right.
So
the FX challenge still, even though there's been stability.
Well, when people stop saying about stability, I heard Bismarck talking about today maybe we get the price at 1,510. I mean, so stability is when it's stable. When I say I come in next month, next week, next year, 2 years' time, 3 years' time, this is what I will get it. As it stands now, I keep saying it, the Naira is in a corridor of stability.
Corridor?
It's a corridor. If you look at that movement, it's in a corridor of stability. You see it today, it's 1,000. There was time, I think it was going for 1,490. It moved to 1,500. It moved to 1,560. It moved to 1,550. But you could see that.
But trading within a range.
Within a range. So we can't necessarily say the Naira is stable. When we talk about stability of the Naira, we're talking about when it happened last, that happened some years ago, 360 Naira for what we were saying about 3 years or 4 years before COVID.
So that's the
we have
real
not
stability.
even seen stability since this current management came in. We've not seen stabilities for 6 months. We've not seen that relative stability for the past 6 months, considering that, okay, this is what the price of the Naira is trading. We have seen that corridor. We have seen, remember before now, it was a corridor of 1,750, 1,800. We moved to 1,600, 1,650. We have now moved to 1,500, 1,550. So you can see that there's a corridor at a particular thing, but we have not seen that stability for the next 6 months, for the next 1 year. So until we get there, that's when people like me will say we are not stable. For now, I think we are in that corridor. Hopefully, the way it's looking is looking good. It's looking good, but he's talked about.
But are we seeing FX losses dropping for most of these companies?
Of course, we will. We have seen them already. I mean, MTN FX losses have dropped. Also, Nigerian Brewery FX losses have dropped. So those FX losses will definitely drop comparable to what they suffered last. Remember at this time last year, like Big Smile said, we're having it at 1,900. So we are seeing 400 Naira different. That is huge. So we're even pricing that into some of these companies that suffer FX losses. It's already moving on to profitability already. So definitely, hopefully, we will see those reduction in FX losses. We're already seeing it. We will see it because we are not getting that high type of exchange rate volatility.
Right.
But we have that. We still have that volatility.
All right, let's look at one of the brewers now. That's Champion Breweries. We have their results out also. And we're seeing cost of sales, 59.44%. Revenue up 64.44% at 20.8 billion. Post-tax profit up about 120%. And gross profit, that's up 71.96%. So did the Dirty December play into...
Yeah, you hit it. Dirty December playing into... We could see it all through the brewery sector. Nigerian Brewery, Guinness, you could see that Dirty December playing in, and those numbers are impressive. But again, you must look at Champion Brewery. You remember there was a point that Nigerian Brewery was part of the shareholder of Samsung Brewery. There's a trying to divestment from there. That added to what we are seeing in terms of the profit. So that is what we have to also look at. But again, like you said, the brewery sector is exciting because again, that sector also suffered a lot of FX losses. And so we are now seeing, I think we are seeing a lot happening in that brewery sector. But like you said, normally December is always the time that you see the brewery sector come in with those impressive results. A lot of festivity, Dirty December, traveling, a lot of festivity.
Now, we have some festivities also coming, towards the early part of the second quarter.
Well, those festivities.
It's not as big, obviously. It doesn't come close.
It doesn't come close. You are talking about Easter.
Right.
Remember, before we were talking of Ramadan, they don't consume a lot of alcohol.
Right.
Then you're talking of Easter. People are fasting before coming to that place. So definitely that profitability will not be huge. But again, what we've seen in the brewery sector is that once it gets to that third quarter, towards the fourth quarter, that's when we seem to see a lot of momentum in the brewery sector. And that will continue. But let's see what happens between the first and the second quarter. Because once the first and the second quarters are positive, you normally see that growth in to the third, and then they are so excited that the fourth quarter will be more. Sometime what we see in the brewery sector, the first quarter performance supersede both the first, the second, and the third quarter in terms of profitability because of those festivity periods. So definitely it's exciting time if we are in the brewery sector. But again, like I said, let's see whether they can maintain that momentum in the first quarter where we expect sales not to be so fantastic. Will there be positivity? then that's when we begin to say the brewery sector is out of the wood.
Right. All right. Let's look at United Capital there, the group. They also posted their results recently. How did you see that one?
Ladi, you need to see how investors reacted to the result. It was on full offer yesterday. But again, when you look at the stock in terms of performance, fantastic result. But investor perception now was, I think investors are not being fair on that stocks. Let's be sincere. That's a stock that gave as a 2-for-1, that's about 200%. And you look at the profitability they were able to pay, though they are paying, I think, 50 kobo. But we have forgotten that they paid 120 interim. So that makes it about 1 naira 70 kobo. It could have been fantastic, but again, you have raised the bar. So a lot of investors were expecting at least give us 1 naira. And so when they saw that 50 kobo, that response was very negative. And you saw that
they've forgotten the good times.
They've forgotten the good time, and that's what the market is of their perception. What's the good time? But again, you see that after some time, when investors really digest that result, you will know that there's a lot of positivity in that result. So it could be a good entry point for most designing investors. And I think we've seen that 10%. We might see that not happening today to that big point in terms of offer. Then you'll begin to see the price will be relatively stable, and that will attract a lot. I think it's a very fantastic stock. If you look at their antecedent, their records, and what they are doing and what they intend to do, then it's still a stock that I think investors should not take their eyes off, especially if you're a long-term investor.
All right, so I'd like you to also look into your crystal ball. In March, the March trading is going on quite fine now, but we started off in the red yesterday for the first trading day. So what are you seeing generally for the month of March?
March is the first quarter of the year, then the time where we expect the giant of the market. I want to talk about the giant, we talk about the financial sector. That's when we see their dividend payouts. Once it's positive, the month of March come up with a lot of positivity. We are waiting for, especially the first tier bank, we are waiting for Zenith, we are waiting for GDCO, we are waiting for Access, we are waiting for UBA. So those are the key drivers of the market in March. Once those numbers comes in and start coming in and they are positive, the market goes very liquid. Sometime it was already priced in, so it now spread a good entry point for new investors. Then comes with the unaudited first quarter result also that normally comes in the month of March. Immediately the approval of that result by the CBI, you begin to see those results. And most also companies in the exchange have that January, February, March as the grace period given to them by the exchange to declare their results. So most earnings, most financial year-end audited report comes in the month of March. So the month of March is a very important month in the Nigerian stock exchange. So we expect a lot of results to come in the month of March, and that also determines the direction of the market towards half year and possibly full year.
Right.
So this is where you get value investors, traders, speculators, all begin to tickle what way is going to happen going forward for the year. So fantastic month of March is where you see a lot of activities in the equity market. But sitting here looking at those crystal balls, when you look at first quarter, second quarter, third quarters, then of the banking sector, you are so positive that, look, the worst that could happen is what they paid last year, they paid again. But again, you look at the price last year and the price today, they are not the same.
Okay.
You look at the profit last year and the profits, there could be a wide difference. Then you're looking at payment. Then you're looking at some other banks also that will be coming to the market, and they want you to be excited to buy them.
Okay, just hold that thought now. I just need to sign this on for our DSTV viewers who are joining live coverage of ministerial briefing at the National Press Center, Radio House, Abuja. But you can watch this on all other platforms, but that's for our DSTV viewers right there. So, you know, definitely, I love the way you've unpacked most of these results, and you know how crucial the month of March is, you know, for this market. But we're seeing the financial services, the tier one bankers, they started off quite weak yesterday with profit taking. Is that some kind of direction, you know, we're getting, or investors just, you know, merely?
I think profit taking. If you look at where they start the year and where they are, and some of them were an all-time year high, all-time high. So a lot of investors are playing cautious. Like I said, sometimes it's pricing, sometimes it's not pricing. So investors are looking at some of this equity. What would drive it? It's going to be the result. So if I cash out at 48 and the result comes in and they are paying 4 naira and I want to go in, do I really lose? Have I really lost any money? Definitely not. Rather have gained. So it's the strategy. But again, you see that the price drop, you now see a lot of volume also in those stocks. That means a lot of investors also are seeing it as good entry point. So it's all about your investment perception.
Right. One man's exit,
one man opportunity.
Another man's entry.
So, but again, I think as we stand now, when you're looking at the number, the first, the second, and the third quarter, the banking stocks, especially tier 1 banks, are still relatively very cheap. PE ratio, dividend yield, profit after tax, earning per share, everything is green as it stands. So there's a lot of opportunities still in the banking sector, especially. Telecom sector also, we'll see the recent hike play out in the first quarter result of some of the telecom sector, that is especially MTN and Airtel. That also will mean investors will have to look at those stocks going forward. Consumer price index is high. So we will be seeing that in the consumer space industries. They have suffered so much.
Now with the rebased inflation.
Laddie, let's not go to that.
Let's not go there.
Let's not go there. But let's look at commodity price index,
right,
which is positive.
Right.
And so that means that a lot of Nigerians' earning ability has improved because of cost of some goods have come down, because of the cost of PMS is also dropping down. So it seems that there seems to be more cash in Nigerians to consume more. So it could affect that sector. So that is the positivity. When you talk about inflation, you definitely see, based on rebasing, which only happened in Nigeria, because I've not seen any...
I guess the important thing is...
I've never seen any economic terms that tells you that rebasing will help you bring down inflation. I don't see any CBM that is fighting inflation and is fighting inflation that, you know what, let's rebase so that we can get inflation comes down. Inflation came down.
But it's something we need to do every 5 years. Rebasing. Exactly. But again, inflation comes down in the long term. I mean, in the larger picture, from 34 to about 24. But in terms of price of agricultural products, that's definitely not as big.
Nothing happens in those spaces. Inflation is still high in those spaces. We're talking about 40% for food inflation. All the inflationary figures were still high. But based on rebasing, the general inflationary figure was low.
Right.
But based on individual, in terms of house rent, in terms of cost of living, everything was still high. So you now know why the CBN, I think the CBN was boxed into a corner. Maybe they didn't expect that kind of figure. That's why they say, you know what? Let's hold rates.
Let's hold. I guess that's a good place to hold the conversation. Thank you so much. It was great having you. That was Mr. Mukhtar Mohammed, CEO of Finance with Mukhtar. Thank you for breaking down these important results for us.
My pleasure always, Laddie. Thank you for having me.
Thank you. All right, we'll take a break now. When we come back, we head straight to the global space. That's in a moment. Just stay with us. Welcome back. Well, I did talk about the global space earlier and how it's been roiled, but what's playing out with the tariffs so far. And we have a lady in red to bring us up to speed on what's happening.
You have to expose me before I was exposed.
You're the lady in red. Don't let me sing the song, but it's fine.
Yeah, Laddie, obviously the theme around the world now is Trump trade tariff. That's right. It. Retaliatory increase, new tariff, but it has to do with Trump tariff.
It's incredible because I'm just wondering what will play out with global inflation, with all that's happening.
And I wonder what the global GDP would look like at the end of this
2025
year if we continue like this, except something drastic happens and, you know, there's a calm to all of these
drastic as maybe peace.
Yeah,
peacefully drastic, right.
All right, good morning, everyone. Welcome to the Global Space, where we take you outside the continent and tell you what's going on in the world of business. We'll start from some company news now. Siladi has done a whole lot with domestic companies, but let's go global now. Saudi state oil producer Aramco has reported a decline in net profit to $102.2 billion in 2024. That's down from $121.3 billion in 2023. The company said that its base dividend for the fourth quarter of 2024 would be $21.1 billion, but its performance linked payout will be just about $0.2 billion. This compares to a third quarter base dividend of $20.3 billion and a performance-linked dividend of $10.8 billion. Lower oil prices hit the company's net profit last year as crude production around the world increased and demand slowed. The price of global benchmark Brent crude futures averaged $80 per barrel in 2024, and that's $2 less than what it was in 2023. This is according to United States Energy Information Administration. Aramco's revenue fell to $436.6 billion in 2024 compared to $440.8 billion the year before. And now the United Nations World Food Programme is closing its Southern Africa office in the wake of Trump administration's aid cuts. In a statement, a spokesperson said that the office in Johannesburg would close and the WFP would consolidate its Southern and East Africa operations into one regional office in Nairobi, Kenya. The spokesperson said that the UN Food Agency had launched a long-term plan to streamline its structure in 2023, but as the donor funding outlook becomes more constrained, they are being compelled to accelerate these efforts. Well, the WFP said that they did not say how much funding it had cost from US aid, but received $4.4 billion in assistance from the US last year, about half its total annual budget and more than 4 times the amount given by the second biggest donor, which is Germany. The Trump administration has said that it was terminating 90% of USAID's foreign aid contracts because they did not advance America's national interest, stopping $60 billion in spending on humanitarian projects across the world. Now, today is March the 4th, and as you would remember, you have heard from so many quarters, yes, it's the tariff day for countries like Canada and Mexico, also China. Now, China has announced tariffs on US goods and a slew of other trade measures in retaliation for an increased 20% trade tariff imposed by the United States President Donald Trump against the country. China's finance ministry has said that it will impose tariffs of 15% on chicken, wheat, corn, and cotton imports from the United States, while soybeans, sorghum, pork, beef, fruits and vegetables, aquatic products, and dairy will face a 10% tariff. China's Commerce Ministry added 15 U.S. entities to an export control list and added 10 U.S. firms to a list of unreliable entities. The measures take effect from March 10. That's about a week from now. One of the companies targeted by Beijing is Illumina Incorporated, and that's on NASDAQ, which is now banned from exporting gene sequencing machines to China. The retaliatory measures come as Beijing decries Trump's decision to raise import tariffs on all Chinese goods to 20% from 10%. Trump's increased tariff came into effect today. That's March 4. And Trump says the increased tariff were aimed at pressuring China into stemming the flow of illegal substances, particularly fentanyl, into the United States territory. President Trump also imposed 25% tariff against Canada and Mexico on similar grounds, while calling on the two to increase their border controls. And Trump imposed 10% on China in February. Well, still related to that now, Europe, of course, they are also involved. Europe's pharmaceutical firms are preparing a hedge against U.S. import duties, and Europe's pharmaceutical firms, they are rushing to prepare for the potential fallout of that import duties, with some forming tariff task forces. Yeah, that's what analysts have called it, and they're warning that these levies on the sector could break global trade rules. Companies say that they've installed their first ever tariff task force to manage uncertainty surrounding U.S. President Donald Trump's proposed trade charges, with some production likely to be directly impacted. President Trump, of course, has signaled that the European Union may be next to face sweeping 25% tariffs on its exports to the U.S., mirroring similar threats toward Canada and Mexico. And of course, we'll be discussing this on our with our Berlin colleagues on Business Incorporated. So you can watch at 1 p.m. and get more on that. And still connected to the Trump tariff is what's going on in the metal space. Gold price is largely unchanged in Asian trading today, supported by safe haven demand as U.S. President Donald Trump's tariffs on Mexico and Canada come into effect. Spot gold was steady, 2,892.98 per ounce. Now let's find out what all of this means to the commodities space, and we're having that conversation with Chief Narrative Officer, Clear's Advisory, Ted George. Ted, good morning and welcome to the program.
Good morning. It's good to be back.
Yeah. So the World Trade Organization had already warned that, this tariff and retaliatory tariff is not going to do anyone any good. Yet we see the spirit of protectionism taking charge, especially coming from the United States. And I wonder what the world will feel in the area of commodities pricing, commodities demand, and even raw materials. The other day it was microchip that was in focus. I wonder what this year would look like by December if this trend continues.
Well, it's not a very good trend at all for commodities, and it's a great shame because, as you're probably aware on your program, you've been talking for the last 2 years about record commodity prices. We saw oil, gas, metals shooting up. We saw cocoa over $10,000 a ton, and really in the last few months they've been coming down, the commodity prices, particularly things like food. If you look at wheat and corn, they're the lowest they've been since around the start of 2020, which is when the whole latest cycle of super prices started. And so there was some hope that the world had got on top of inflation, and tariffs are just the worst thing on every level, because not only do tariffs obviously drive up prices, but they usually lead to a drop in consumer sentiment. We've already seen some examples of this in America. There's a real dropping in sentiment, but also a drop in investment because there's uncertainty. All of this feeds into actually driving up prices further. So I think there's a real concern that actually where we have had some real gains in recent months with commodity prices falling, we can see them rising again because of this disruption and uncertainty. And the truth is that, if one person puts up a tariff and another nation puts up one in return, in the end, both sides lose. We learned this the hard way in the 30s, but it seems we're back where we were then.
In all of this, I spoke to someone in Black American the other day, and he was really passionate about what Africa should be doing. And you did mention cocoa. Most of these materials, some of these, agricultural material, commodities especially, we have them in Africa. What should Africa be doing at this point with the tariff war waging all around?
Well, in the case of Africa, the tariffs are not too significant in terms of what the United States is proposing, because the US is actually a relatively small player when it comes to Africa. The US is big stuff in the Americas, it's very important in Asia, and obviously in Western Europe in terms of its importance for security. But in Africa, it's around the fourth or the fifth largest trading partner, and it's probably only around the third or the fourth largest investment partner. The EU, China, India, the UAE, they're far more important to Africa. And so my own view is I think the US administration needs to tread carefully when it's in Africa. It doesn't have the same clout there that it does in the rest of the world. And in fact, most of the exports of Africa to the US, they used to be oil. There's a lot less of that now because the US has increased its own production. But it's only certain sectors that are threatened. If we think about AGOA, the Africa Growth and Opportunity Act, a lot of South Africa's car exports go to the USA under that. So that could really hurt South Africa and that particular sector. But generally speaking, speaking, I think the US has to tread carefully, because if it's worried about other countries falling under the influence of Russia and China and India, if it starts pushing a very hard tariff and aggressive policy on trade in Africa, it could push them right into their arms. Yeah,
but Africa has to be ready. Africa has more of raw materials without adding value. I guess that's why they're even talking about the cocoa exchange now, if that could, help package some of those products for international exports.
Absolutely. And this is a project I'm working on for the International Cocoa Organization to create an Africa Cocoa Exchange. And the idea is to trade cocoa in Africa, not as it currently is in London and New York, which is very far from the farm gate. And the real aim here is to give more transparency, to actually cut out a lot of the middlemen, and to enable the farmers, the cooperatives, the local processors to get a better price, a more accurate price, but also a lot more value addition as well. So I really think this question about value addition is so critical to Africa. Africa also has the youngest population in the world, which is growing. There is an opportunity here when we look at the outsourcing of jobs as well. And so this could be an opportunity to grasp onto that, particularly as we see some of these more traditional areas which were manufacturing hubs, take China, simply become too expensive compared to other parts of the world.
Yeah, but Africa still has to think about its infrastructure. Does it have its infrastructure developed to enable its export? That's also seems to be another challenge.
Absolutely. And look, I think, as everyone knows, the big issue above all is power. It's all about energy. As you'll know, in Nigeria, there are some people who live in Lagos who have 3 generators. One in case the network goes down, another in case their generator breaks, and another as an emergency for the generator of the generator. This problem about not being able to guarantee power is really problematic if you're trying to have some kind of industry. And obviously, if you're doing something agricultural, you need to cool a product. You need electricity. So that's one of the keys. But the other thing, of course, is everything about roads and ports and infrastructure. Too many of the roads are insufficient. There's way too much clogging of the ports and the basic networks for trade. So I think that's really where the focus has to be. And there's a huge amount of investment needed. I think they're talking about something like $130 billion a year. So a lot of that is going to have to come from other parts of the world. We need in Africa to get more investors into these critical sectors.
Yeah, we certainly do need that. George, thank you so much for joining us this morning. Good to have you back. Hope you stay with us, the Chief Narrative Officer of Players Advisory.
My pleasure.
All right, Ladi, so it's a war out there, but Africa does have some opportunities. But the question is Africa ready for it? Because you don't just wake up and go into export to fill in the gap, perhaps, of the trade relationship between China and the US, for instance. You need to have developed your infrastructure, your products, your agricultural produce to be able to meet up with the demand and the standards.
And Africa should have started this yesterday, but it's never too late to start. And I did hear Ted there mention some Nigerians have 2 or 3 generators. But the solar gang will say, what's a generator at this point?
Right,
thank you so much, Aini, for giving us the details. So that's the show today. Thank you for watching. I'm Ladi Williams from me and the team right here at Channels HQ's. Bye for now. See you at 1 p.m.